Hello and welcome to Explain the Charts. Today is March 24th, 2025, and we're taking a look at the S&P 500, SPY. We will be discussing current events and news, then analyzing the chart data to identify trends and important price levels. The big story today is the report from Barron's about potentially lighter tariffs than previously threatened by President Trump, offering some hope for a market rally. According to the report, the White House may hold back some tariffs after the April 2nd deadline, particularly those targeting sectors like automobiles and semiconductors. However, reciprocal tariffs will still be implemented, keeping some pressure on. This news, along with increasing optimism about a potential meeting between President Trump and China's leader Xi Jinping, is driving positive sentiment in the futures market. Let's switch over to the daily chart to see how this potential shift in tariff policy might be reflected in the SPY's price action. Looking at the one-day chart, we can see that since around November 2023, we've generally been in an uptrend, recently hitting all-time highs of around 570 in March 2025. However, also in March, the chart dipped sharply to about 560 and has been going sideways ever since. Now, let's zoom in on a specific range on the daily chart from around December 18th, 2024 to now, to see the more recent price action in detail. Zooming in, we see a sharp dip around December 18th from 606 to around 586, and some consolidation with multiple ups and downs until we reached all-time highs around January 24th, 2025. From there, the price continued upward to all-time highs until a sharper drop to around 560 in March. Now let's drill down to the hourly chart and see what that looks like. If we switch to the 1-hour chart, we can see the recent volatility more clearly. Note the dips in early March and the choppiness of the price action, showing indecision in the market. This corresponds to market uncertainty regarding those Liberation Day tariffs. To get an even closer look, let's jump to the 15-minute chart. Here, we can see the increased volatility with more intraday swings. The key levels to watch are the recent highs around 570, acting as a potential resistance, and the recent lows around 560 as support. If the price breaks above 570, bolstered by positive tariff news, we could see a continuation of the uptrend. However, if the tariff relief doesn't materialize and negative surprises emerge, a break below 560 could signal a further correction. For the short term, be prepared for continued volatility. Keep an eye on the PMI data and any official announcements regarding tariffs. In the long term, the outlook remains cautiously optimistic, but it's crucial to stay informed and adapt your strategy based on the incoming news and data. So, to recap, we're looking at potential upside if tariff news is positive and possible downside risk if those tariffs persist or get worse. Key price levels: watch 570 as potential resistance and 560 as support. Keep an eye out for PMI data and official tariff announcements. Those will affect market sentiment. There's a medium likelihood the market will react positively to tariff news, given the current positive sentiment, and a medium likelihood it will go down given the uncertain geopolitical and macroeconomic landscape. Thanks for watching Explain the Charts and happy trading!